Hello everyone, my name is Moji, and you're watching Bitcoin Bubble News Channel. I believe 2008 was the big reset. It was the one that everyone was waiting for. Well, most people lean towards, it's all going to blow up, I want to know how to do it. How are the assets going to fall if you can debase a global reserve currency? It's not possible. In bolivars, the Venezuelan stock market goes up and down a lot. In dollars, it goes down. That's low class. I'm like, I don't think that's what will happen. Remember that magic formula, GDP growth plus productivity growth plus debt growth. That's what I think the result will be. Yes, debt growth has stopped now, old bills are just being paid off. It's been 30 years since we last saw population growth this low. What is the answer? Bots and AI. They are endless people. Fed Chair Jerome Powell has finally sent the biggest dovish message since the U.S. Federal Reserve started raising rates in 2022. This comes after months of stubbornly remaining hawkish despite signs that the economy was cooling too quickly. Powell hinted that the central bank will start lowering interest rates in September while speaking at the annual Jackson Hole Symposium in Wyoming on Friday. Powell said on Friday that policy needs to be changed now. It's clear where things are going, but when and how fast rates will be lowered will rest on new information, how the outlook changes and how much risk there is. Powell didn't say how much the Fed would lower its key rate next month, but most economists think it will be a quarter point in September and at least one more before the end of the year. Powell talked about how the Fed has made a lot of work in lowering inflation, but that the job is not yet done. The head of the Fed is sure that inflation is now on a path that will keep it at or below the 2% goal set by the Fed. He also said that the state of the job market was a reason why rates were lowered in September. He said that the risks of inflation going up have gone down, while the risks of unemployment going down have gone up. It doesn't look like the job market will be a major cause of rising prices anytime soon. We don't want or welcome the job market to cool down even more. Several analysts and well-known investors have been predicting this for a few months now, even though the Fed has said it will keep rates higher for longer until it reaches its 2% inflation goal. Raoul Pal, founder and CEO of Real Vision, may be the only person who has been able to consistently and accurately predict this moment. He has spent a lot of the year teaching investors about the everything code and why the Fed and other central banks are 100% certain to start cutting interest rates and doing quantitative easing again. The rate goes down, QE, add more noise, and how it changes the prices of assets, especially coins, make up Raoul Pal's everything code theory, which he talked about with Mark Moss not long ago. As we show you parts of the chat, please like this video, subscribe to the channel, and turn on post notifications to get more videos like this. For the channel's growth, everything you do is very helpful for the YouTube system. Thanks, and have fun with the movie. The strange thing about the everything code is that it makes everything so easy. I'll describe what it is. It's too easy. This is something that most people think is impossible. We knew it in the world of Bitcoin because we saw a circle coming together. This cycle has been making us feel stupid, like it might just be the half cycle. We're not sure. After looking more closely, I saw that the business cycle was just right. I used the ISM poll to figure out the business cycle, and it was a great cycle. That seems strange to me, because you should go back if you remember. In the years before 2008, there were long stretches of no recession followed by short ones. All of a sudden, though, it sounds like a clock. I wonder what that's all about. Over time, it helped me understand that 2008 was probably the big restart. It was the one that everyone was waiting for. On top of that, they told everyone that they didn't have to pay interest on any of their loans. That meant there were no interest rates. Next, they tried the new method of quantitative easing, which is to print money. Now, that made it possible for every important government in the world to refinance all of their debts over the next 3 to 5 years. That's what they all did. It made the business cycle go in a 4-year loop. Then the prices of all the assets are linked, whether they are tech stocks or Bitcoin. The economy, the presidential race, and the halving of Bitcoin are all driven by the same cycle. That makes the game a lot easier once you know it. This won't last forever, but for now, everything seems to be going just right. One of these cycles can be broken down into 4 parts, which I call seasons. You can call it crypto winter or mega winter. That was in 2022. That was in 2018. That was in 2014. That's 4 years. Spring comes next. At that point, no one really thinks that anything is changing, but prices start going up. Most people didn't think Bitcoin would have a good year in 2023, but it did. Spring is when the shoots come up. From then on until summer, which this year happens to be an election year, the debt starts to be refinanced. To pay for it, They have to use cash on hand because the GDP isn't growing fast enough to cover the interest on the loans. Because of this, they keep adding to their bills and turning the interest payments into cash. This causes the value of their currency to drop, which happens around the world at an average rate of 8% per year. So next year will be macro full, and then because it's built on the debt refinancing cycle, the cycle ends and starts all over again. There are two ways to look at this 8% drop in the value of the coin. You have a good point when you say that our future wealth is being stolen from us. This is because your future self is getting poorer, because you can't buy as many assets with the money you make the same amount of money. The things lose value because of this. You can also say I'm paying an 8% put option fee that the whole system doesn't break due to the fact that they are also doing that, because they need to pay off the loan again. They shouldn't let the prices of assets drop too much. We can talk about that. But there is another way to look at it. And you ask yourself, would you pay 8% a year to make sure not a single thing breaks? Perhaps. Pal says that central banks have found the magic recipe that will keep the world economy from falling apart, which many people have been saying would happen for years, even though this costs everyone. The falling value of paper currencies. Pal thinks it's a small price to pay to keep the world economy from falling apart. The famous macroanalyst said that the only way out is to invest in things that will do better than this regular debasement of the average. When it comes to this, cryptocurrencies, especially well-known ones like Bitcoin, Ethereum, and Solana, are the best. This is why Pal thinks the market for cryptocurrencies will grow at least 400% from just over $2 trillion now to $10 to $15 trillion at the height of the bull market next year. Powell says that until a better long-term answer comes along, central banks will be able to keep the rest of the world economy going by printing money from time to time. Here are some more clips from his talk with Moss. People are living longer, and as you can see from your parents, they spend less as they get older. So GDP growth rates tend to be lower in places where people are getting older. All of them do. This has happened everywhere because older people pay less. A lot of the time, they don't know how long they'll live to be old. My dad must have spent 60% to 70% less after he retired because he thought, well, I have this much money. I have no idea how I'll live. Will someone take care of my wife? So they change the way they do things. That, along with debt, slows down GDP growth. So the whole thing keeps adding up. For example, interest rates are at 5.5% right now. But the GDP rate has been about 1.75% per year for the last 5 or 6 years. To refinance them, you need to get interest rates down because you have a big gap. But GDP keeps going down over time. You can also guess what will happen in the future. It's just the births and deaths, and it tells you about 30 years. It's just telling us we're going to keep bringing down GDP unless something big happens, like with technology. It's getting worse. People in Japan, China, and most of Europe are older than people in the US because they didn't have as much immigrants. You'll see that their GDP keeps going down. The migrant rate in Australia